Hey traders, John Howell here. I want to talk about why this time is different when it comes to the markets. I also want to talk about some trading that I've done in the last couple of weeks that I've talked about on YouTube. And I want to share with you some things that's important to you if you want to become really good at this thing called trading. How have I managed my positions with my trading positions and stuff that I've done on YouTube, and how can you start to apply that if you want to start to get ahead in the markets? Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Guys, I am running right now. I've got think 2 spots left open. I think it is somewhere. Maybe it's closed right now. I don't know, but I'm running what I call the super trader formula. This is the exact formula that I had to follow in order for me to actually get ahead in the market. What was step 1? What was step 2? What are the things that? What are the important things I needed to focus on for me to go from $250,000 in debt to then obviously trading really well? If you'd like to see that, and then I'm giving it to you for free to the very first next 2 people I think it is. Then just go to that link below. Man, I can't talk this morning. It's like fun. Just go to that link below, guys. You'll be able to see all the details. Oh yeah. Let's get straight into the charts. One thing that you will notice about the markets in past times of how fast. Look at this here. Something that's been really interesting. Notice how fast, I've got a couple of different trend lines here, right? So this is that's that big long-term wedgie that we've got in place. And we have this channel in place as well too, okay? So we have this channel here. Now, channels, they do break, right? And so, but look at this here. This is why it's actually, the video that I did yesterday, I really want to sort of talk about this here, that just look at this here, right? So we have a low. Look at this here. As soon as we came down, we rejected it fast. Came down, rejected it fast. Came down, rejected it fast. Came down, oh no, and then down. See that through there? And so look at this here. So if I actually, and so you can see that's the reason why this time is actually different, and we're breaking below these major low levels all through here. You can see if I just actually bring my trend line up through there, so I can just connect all the lows for a minute. You can see how we're definitely closing below out of this level here after not pausing. Because if this was a continuation of a strong bull market, then guess what? We would actually hold and we would rally back to the upside. Because we haven't done so, we're breaking back down. Now, here's a big thing, guys. I noticed this with some of my private clients as well too. And that is that just because the S&P 500 is going down does not mean that if I bring up, this is the S&P 500 stocks here, all right? So let me just blow this up here for a minute. Right now, we're looking at all the different stocks in the S&P 500, all right? All the different stocks. Now, it's very important that just because we see the S&P 500, a view on the S&P 500, so like right here, this view right here, is bearish, right? And we're probably likely to see some more downside to come. Just because the S&P 500 is bearish does not mean that we are going to we're not going to get some really big moves on the green side. Make sense? So that's a lot of people think, oh, well, the S&P 500 is bearish, so therefore I should be looking for short opportunities. No. The most important part, right, is some sort of a plan, some sort of a pattern, some sort of a system that you approach. And everyone has their own system and their own method, the way they're approaching it, right? So like for me personally, I see a lot of bearishness in the markets, but I'm in one long signal for a few days now, and I just recently, as of Friday's close last week, I got into another long signal, but I'm also in a short trade as well too. But I'm doing that based on a system. It's not based on what I think. Makes sense? So it's important that if you find really good opportunities, like for your system, for whatever system. Now, if you're not following some sort of a system, then it's important that you actually you need to find something, and there is no one size fits all, and there's no perfect system out there. Every single system is going to generate some losses. That's part of parcel. I think sometimes most people out there, they find that, they try to find these perfect systems, right? And it's like, it's like with you may become part of a course, and that course teaches a trade, and you have a couple of losing trades. You're like, oh my goodness, I thought this was a successful system. Maybe you just took the wrong trades. So I really want you to be careful of that as well too. Okay, again, you can see through here, and if you go look at, say, something like, if I look at, say, the Russell 1000, okay, this is the Russell 1000 through here. If I go to the Russell, all right, here we go, all right, Russell 1000, same sort of thing. Russell 1000 is pretty much similar to the S&P 500, makes sense? So, but if I go to the Russell 1000, and let me blow this up here, this is the Russell 1000 stocks. Look at all these stocks on the bullish side. Like, we're talking about 17%, 8%, 6%, 4%. Look at all the stocks that have had very good green days today. And yes, but then we go down, and then we can start to get into, obviously, the stocks that have had, obviously, red days and so on and so forth. Continue down. And this is where you start to get into to stocks that have actually been red. But I hope you can see that it's a market of stocks, not really a stock. It's not really a stock market, right? It's a market of stocks, not a stock market. And so one of the best things that I can recommend you doing is that, even though the market may be bearish, all right? So even though the market may be bearish here, and the S&P 500 looks pretty bearish here, and if I go to my Dow Jones, and I'm noticing even on my Dow Jones chart, look at this here. It's really starting to look bearish. Notice this support level, which is also going back inside of, if I go to my weekly charts here for a minute, look at this here, right? So if I bring this up to here, that was that close point all through there. There we go. Right, so you can see how it rejected it. And you can see what actually happened this week, right? We came down, came back up, we rejected it, came down, closed lower. And remember that, look at this here. We all through here, we could not close above. As soon as we closed above, look what happened. It now became what? We could not close below. It now, once was resistance all through here, now became support. Look what's happening now. We came back down. It's now testing it as resistance. So that's actually pretty bearish for the good old DJ. So, and looking at the Dow Jones, right? And you can see here a lot of still weakness in the markets, right? We're still slowly going down. So I wouldn't be too surprised, guys, to see more weakness coming into the into the markets moving forward. Again, it's probably going to be a bearish week moving into next week, but we'll take it one day at a time when it comes to that. But the purpose of me telling you this, right, is like, even though these indices are bearish, that if I get a bullish setup in the markets, I'm going to take that, because my setup has a high probability of doing well regardless of what the S&P 500 is doing. Makes sense? Because just think about this for a minute, okay? If you take a system that you have and you backtest it over a whole bunch of stocks, you're like, oh my goodness, this works so well. And then suddenly you start to trade it, and then you're like, okay, now are you going to trade it the way you backtested it, or are you going to start to add different variables? Well, and that's what we do, right? We backtest it. It's like, okay, this is actually a really good system. So then you start to trade it, and then suddenly you hear me on YouTube going, oh my goodness, correction's coming, here we go, Donkey Kong, and all right, all that sort of stuff, right? Santa Claus and so on and so forth. But if you, right, and then you get so sucked into that, you think the market's going to crash, so therefore you get out of your long positions, and then guess what happens? The market may not even crash, because no one really knows, right? You can just use charts, probabilities, so on and so forth. And then suddenly what ends up happening, right, is that the long position actually continues up. Or what it can even happen is the market does pull back and your stock still goes up. Why? Just like even the Dow Jones, the S&P 500, and the Russell, what I've mentioned today. We've had red down days all through here, but we've had super green days on a basket of stocks inside the indice or inside that index. So the most important part to you, right, is not really the S&P 500, the Dow Jones, even though we do this, right? We say, oh, look at the S&P. It's an average of what the market's doing. But just because the average is doing that does not mean that you shouldn't take some bullish trades, right? Because once again, as I said before, like, I don't really care what the S&P 500 is doing for my trades, because I have my trade, like I have my pattern. And I know, guys, for me personally, I know most of the time, and this is how confident I am in my trading system and the way that I trade, right? I know most of the time I get into what I call my perfect setup. It's going to at least hit my short-term profit target, at least most of the time. We're talking 90+% of the time it's going to do that. I have my stop loss, I have my target in, and most of the time it's going to hit that. And it just happens again and again and again and again and again. So if I have a trading system that actually is set up like that, where I know almost every single time it's going to at least hit my profit target. Now, not every time. And then there are times where, yes, I do get my stop outs. Like, oh, damn, I didn't like that, right? But if I have a setup and a system that when I see it on the charts, I'm like, okay, here's my stop loss, here's my short-term target. And I know most of the time, 90+% of the time, it's going to hit that short-term profit target. Why wouldn't I take it? It's like free money, right? Right, free money. Just imagine this, guys. Imagine you actually you're getting into a trade and you setting a 30% profit target or a 40% profit target with an option. Imagine you get into a trade, you say, okay, I'm going to set a 40% profit target, and you knew 90+% of the time, almost every single time. Now, not every time, almost every single time, that was going to hit that profit target. How many times would you take that trade? Right? How many times would you take that trade? Like every single time, right? Yes, you're going to have your losses again. Like that's just part of parcels, and there's a lot more that goes into it. Actually, no, there's not. Actually, there's not. I'm lying there. Really, it's like step 1, what is the setup? Step 2, how do you find the setups? Step 3 is like, where do you actually place the stops and the exits? What's your maximum risk, and where's your short-term target? And then we can afterwards we can start to look at let our profits run. That's how trading's done, right, guys? And that actually exists out there. It really does. That's exactly what I teach my private clients. So again, you can actually put it this way, guys. When you go over to the Super Trader Formula below, and you actually put your email address in, your name and email address in to get access to the video that I share with you. I'm also going to be over the next couple of days. Just be patient, but over the next couple of days, I'm going to be sending you a free trading course. And in that free trading course, I'm going to teach you my number 1 setup. Like, just guys, it's there, right? I'm going to be helping you. But or if you'd like to become a private client of mine and actually get that system and get the scans and so on and so forth, just email me and we can actually I can book a time with you and we can actually talk about you becoming a private client if that's what you want to do. If you want weekly coaching from me and so on and so forth. Anyway, so the purpose of me saying this, guys, is this: we have these markets here. Right? Markets go down, markets go up. Right? We have support, and resistance, right? We have this here. Make sense? So here's the thing. Once again, if the market looks like it's going to have a big bearish week next week, which it does right now, as I said before, market looks like it's going to have a pretty big bearish week. But I know without a doubt, the trades I get into are going to most of the time at least hit my short-term target. Why wouldn't I take that even on the bullish side? So therefore I do take that, right? So again, I got into one trade literally on Friday that is exactly like that. Now I'm not going to share that with you right here, right now. My private clients probably know what that is, right? And I'll share that with you after I've actually finished that trade. I'm not going to give you guys the the trade for free, because you guys are going to jump into it and then you won't know how to manage it. You won't know the profit targets and so on and so forth. So no, I'm not going to give you that for free, right? I actually teach you the setup, and so again, and how to find it. But anyway, because it's not about just one trade. The reason why I won't share that one trade with you, because it's not about that one trade. It's about what is the setup, and then how do you do that for the rest of your life. Anyway, so I hope you can see, guys, that trading is merely nothing more than just how you approach the markets. See, for me personally, guys, and I don't know about you, but for me personally, I don't like trading a lot. I get too emotional. and I lose money. If I start trading a lot and I'm in a lot of positions, I start to get emotional. I really do. And because there's too much risk at my account. And I just don't do well. I don't make good decisions. See, to be a good trader, we need to try to remove that emotion as much as possible, right? One of the big things is how much risk is on our account, because I've always said this to my private clients, that if you can trade the exact same system with a lot more risk on your account and actually not do well, but trade the same system with small risk on your account and do well. What's the differences? Let me explain what I mean here, okay? So, trader number one is risking 20% of his account on one trade. That's way too much, right? And then let's just say trader number two, he's risking 2% of his account, right? That's we're talking about maximum risk here, right? That's maximum risk. And let's just say, for example, you got into a trade and you got into a breakaway bar, right? The breakaway bar like this here. And let's just say, for example, that's there. And let's just say that's there. And you have your stop at the low of the bar. Let's just say you have the stop there. And let's say you actually have some sort of profit target up here, okay? You know exactly how to calculate the profit target, and that's the profit target there. Well, what actually happens next? Trader A, so sometimes the market does this, right? Market does that. And then the market might do that. And then the market might do that. And then the market might do that, right? So then guess what? Trader A, because it actually hasn't hit the stop loss yet, trader A is like, oh my goodness, I can't lose money. Guess what happens? They get out, and then how many times this has happened to you guys? You get out, and then guess what? It starts to do this, it comes up, and then hit your profit target, and you're like, oh my goodness, if I just stayed in that thing. And that's why, guys, trading too much risk on your account causes the emotion, which causes you to get out and actually having a bad win-loss ratio instead of a good win-loss ratio. And yes, you can have a good trading system, but if your emotions are imbalanced, this is actually what can happen, right? Is that there's a lot, like I'll get into a nice sort of breakaway bar, and a lot of the times the market will run up like that and hit my target really quickly. It happens almost all the time, right? But then sometimes I'll get into the trade and it might do this for a bit and then start to run on. Or sometimes I'll get into a trade, it may come down a little bit, may do that, and then start to do that, right? And that's the breakaway bar there. But it's during this period of time, like I'm very, 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 very confident whenever I get into my trade. I have my stop loss in place, I have my target in place, and I know most of the time that there's my stop, that most of the time, regardless of what happens in between that especially on a daily chart, literally within 1 week, I know most of the time I'm going to get my profit target. How it actually happens, I don't know. So I hope that makes sense to you guys about one of the biggest things that stops you with your trading out there, and one of the things that caused me to go backwards, and it always happened. I didn't know why, right? I didn't know why. Whenever I reduced my risk on my account to like 2%, and I get into some trades, and I focus on trading more and not making a lot of money, guess what? I started making a lot of money. But then when I focused on making a lot of money and lining up on massive positions in one trade, trying to make a lot of money, guess what happened? I didn't make a lot of money. And I was banging my head. I'm like, this doesn't make sense. And then now looking back over 17 years of my trading experience, now it definitely makes sense. It makes sense because when I'm having too much risk in my account, I can't afford to have that. I have 2 losses in a row. My account's down now 50%. I now have to make 100% return on my account just to get back to break even. So I don't like having that risk on my account. And so when I reduce my risk on my account, I know, one, I'm focusing on trading more. So I'm actually probably taking good quality trade setups that meet the rules. And I'm focusing on just sticking to the plan and not being emotional about it. But if I'm focusing on making money, guess what? I'm probably going to be getting into trades that I shouldn't be in the first place because I'm just focusing on making money and I'm not being a good trader. Simply means I'm not just letting the market do its thing and I let the market, start to move forward and stuff like that. So what I mean by that is that whenever you trade too much, right, most of the time you're just looking for something to get into because you're looking to make money, and you get into it, and then when you get out of it, you realize that actually wasn't even a trade that actually met the rules. It happened to one of my private clients recently. I know that. He's just like he wanted to get into a trade. He's looking for a trade. He wanted to get into a trade, and what ended up happening was he actually, you know, he was getting a bit frustrated or whatever. I'm not sure why, and he wanted to make some money, and so he got into a trade, and it wasn't a very good quality trade. Actually, it wasn't a trade that meets our perfect standards for a perfect quality setup that meets our profit target most of the time. And so when he showed me, I'm like, man, this trade didn't even really meet the setup of what we're actually looking for. And then I asked him what was going on, and then I realized that he was just looking for a trade because he wanted to make some money. I think it was like rent or bills, or or he was getting a bit sort of nervous and about like money and so on and so forth, right? And that's actually what caused him to actually even have a losing trade. He shouldn't have been in that trade in the first place. So a big thing for you guys is that's the reason why the lower the risk really on your account, the more you're actually likely to make. It's a counterintuitive thing when it comes to your trading, because I have found in my own trading that when I'm reducing my risk, and I'm not trying to make a bucket load of, I'm not trying to YOLO in one thing and trying to make money really, really quickly. You may hear the stories of YOLOing and hodling. And this guy put all his money in this one coin and made $1 million. But there's 1 million more people out there who did the exact same thing, who blew themselves up. Okay? So please don't be looking to get into positions based on that. And for me personally, it's like, okay, I want to be around these markets for a long time. I want to continue to grow my account and continue being around here. So I always teach, and this is something I teach with the Super Trader Formula as well too. When I talk to you, link below, go get your spot right now. Is your foundation? What is your foundation built on? Because if your foundation is built on YOLOing and hodling, and that sort of stuff. Let's just say, for example, you did that. Let's just say, for example, that you YOLOed in the one trade, and you hold into just this one coin, right? You listen to these people out there, and you took the tip, right? You took the tip, and it's like, here we go. I'm in. I took the tip, right? I got the tip, and guess what? You YOLOed, and you hear these stories of guys putting 100 grand in. Let's say you put 100K in, right? You got 100K. And maybe that's all your savings. Maybe you can pull that out of your house, which is just absolutely ridiculous. And you should never, ever, ever, ever do that until you've been trading successfully now for at least 12 months with a small trading account, and then you have earned the right to start to build it up from there. Anyway, so you YOLOed into one trade. You took the hot tip, and guess what? Bam! This thing takes off, and you are now out what? $1 million. Oh, look at me, John. Oh, I got it right. I'm the man. Ego, you become Donkey Kong, right? You're the Donkey Kong guy. No. Why no, John? Yeah? No? I just made $1 million, John, in one trade. How much money did you make in your last trade? They say to me. I'm like, it's not about that, right? It's not about that. And so I say, okay, cool. That was phenomenal. That was amazing, guys. And this is the phone calls that I have with some of you guys when I actually call you up, and I speak to you. So guess what? It's just like, oh my goodness. It's like, yeah, it's like, here we go. So I said to him, okay, cool. So tell me, you just made a lot of money really quickly. Now, tell me, how can you do that? Tell me, how can you repeat that same process for the rest of your life so you never have to worry about money ever again? Because let's just say, for example, you now spend all this money on a new car and a new house. It's gone. Then what? What's more likely to happen is that you're going to take that $1 million, YOLO into something else, and then lose the whole lot. So that's probably what's going to happen. It happens all the time. It happened to me as well too, guys. Like, trust me, I've been that YOLO guy. It's like, oh my goodness, here we go. I remember my very first time, guys. I just made like over 100 grand in one trade, and I'm like, oh my goodness, this is so incredible. I wanted to make 100 grand in a year, and I made it in one trade. I gave that all back the next trade because it was a YOLO trade, right? So that's the whole point there, right? I was like, I don't really care about what you can do once. And I teach my private clients. And again, if you're interested in joining my private coaching, becoming a private coaching client, just email me. If you go to the About Us tab, you'll be able to see my email address there. Just email me and I can schedule a time. We can have a chat about it if you're interested in becoming a private client. But it's something I tell my private clients. It's not about getting it right once. It's not about you watching this YouTube video right now and getting it right once, right? What is it about? It's about you having a system and a systematic approach that will never change regardless of bull markets, bear markets. And you know that you can rely on this systematic approach to do really well for the rest of your life. That's what it's about, right? What happens now? What does that build into? That's built into now, if once you start to do this for 1 month, 2 months, 3 months, 6 months, 1 year, 2 years, 3 years, and you start to do the same thing over and over and over and over and over again, guess what that builds into you? Confidence and security. Because security doesn't come of how much money you got in your account. Security comes know that you can go do it again and again and again and again and again and again and again. And you're just like, this thing just works. Yes, I'm going to have my losses in place, and that's just the way trading is, but this thing just works. That's what gives me the confidence. And now I'm even teaching my sons, or actually my kids, my daughter's not really interested. She just wants to have chats with dad. My 2 sons, they're like, Dad, what are you doing? I'm like, let me show you. I'll teach you investing. And so I'm teaching them, right? And I'm teaching them, which is exactly what I'm talking with you guys right now. And I teach them the system and the setup and so on and so forth. It's like, so that's what I'm interested with you guys. Okay. I'm really, 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 really interested with you guys to do really well with the rest of your life. Not just this once-off thing, you know. I mean, like, I'm not about this, you know, one-hit shot pony and then suddenly you blow yourself up and then suddenly you're out of the water. I want you guys to build a solid, right? Let's actually build this solid, this foundation here. I don't want this to be sand. I don't want this to be sand. I want this to be rock solid, you know, like solid. S-O, solid. Is it L? How do you spell solid? All right, let me. Solid. S-O-L-I-D. I thought so. Sunday morning for me. Get you some of that, all right? Bill. That's supposed to be an L. Anyway, there we go. I'm happy. So there you go. How about that for my 2 brain cells just weren't working there. It's like, how do you spell solid? Have you ever done that before, guys? Like you think about a word like the. It's like, how the hell did I spell the? It's like brain explosion. So anyway, I want you guys to build a solid foundation about the way you trade. And so you can slowly, if this is over here, if this is 10 years from now, and guess what, guys? 2030 is going to be here whether you like it or not. 2025, 5 years. Actually, it's almost 4 years. So let's just say 4 years, right? 4 years. 2025 is coming, whether you like it or not. But what are you doing? Are you looking for are you looking for one hit shot pony? Or are you looking for this up, like very volatile? Or are you looking to do something like this? You know, you might have flat periods in your trading. Or do you want something like that in your trading? Because that's how the real equity curve goes, right? Like sometimes you might have some losing trades or some flat periods where there is no trades. You might have a down period through here where you have some losing trades. Then you might have some trades where there is no trades. And then suddenly you get a period where there's a lot of trades and a lot of trades and a lot of trades. Make sense, guys? And so that's what I want my foundation to be built on. And that's where that's where the foundation, when I see my private client, when I see there has been three successful traders that really successful traders that I've looked up to in the past. And I still look up to them every day. They've had a major impact on the way that I trade. And two of them that I know, are 7-figure traders, right? Made more than $1 million. They're 7-figure traders, but guess what? The biggest thing that I've learned from them is not that they're lucky and not that they know what's going to happen, but when they see a setup that meets their plan, guess what? They know they're in. And so the plan is, one thing for me, guys, is that I couldn't trade a system that has a low win-loss ratio, because a lower win-loss ratio system here, if I have a 60% win-loss ratio system, which is still good, right? You're still going to make money out of it, but you have to go. That generally produces a lot of trades, and you're going to go through 2 or 3 or sometimes even 4 losses in a row at times, and you have to just accept that. I have traded systems like that, and I get too emotional. Why? Because there's a lot of trades that happen with that. The lower the win-loss ratio, the more trades you have. The higher the win-loss ratio, like a 90% win-loss ratio, guess what? The less trades you have. But guess what? The more confidence over time it allows me, that I know that my account is going to do that, and therefore my increasing positions as my account grows like that as well too. Makes sense? So I cannot, whatever system you're trading, if you're trading a low win-loss ratio system, just expect a lot of trades, and just expect that you can have 2 or 3 or 4 losses in a row, and it be just a natural part of the process in the big picture things when it comes to your trading here. For me personally, the way that I trade, I don't like trading a lot. I don't want a lot. I just want those really good, amazing quality trades that I'm getting into, and I'm happy to wait as long as I have to. If I have to wait a whole week, or 2 weeks, or 3 weeks, or a whole month to find one really good trade that I know that is like just I'm so confident making it, why wouldn't I wait for that, right? And guess what? And if I only do that, which I teach my private clients, guess what happens? You end up doing really well from trading, right? And then you look but I guarantee you take this guy over here, let's say from zero. You take this guy over here, trading this one here, doesn't understand this. He's had 2 or 3 or 4 losses in a row. He goes, I thought this was a successful system. It is, but it's just a low win-loss ratio system, and so on and so forth. So, oh man. So I hope you can see what I'm talking about there when it comes to your trading. And this all ties back into, we do analysis on the S&P 500, and so do the other people out there that do this. Makes sense? So we see that that we do the S&P 500 and we do the Nasdaq and so on and so forth. And I do have my trading system, but then also have my positions for more like investing opportunities. Sometimes it's really long term, and sometimes it's more like for just the next 6 months, or my next 6 months view of the markets. And I've talked about that before, because like I'm in with the Nasdaq and all that sort of stuff as well too. Like for example, like I've been in the QQQ since back here, and I see a lot more upside coming out of the QQQs. I see a lot more upside coming out of Nasdaq. So to the end of this year anyway, because I ultimately have a target on the Nasdaq at 17,000 by the end of this year. And I know that sounds pretty crazy, but that's just where I see things. That's my target there. So I may be wrong, I may be right. We still have 3 months left. We'll have to wait and see. But right now, guys, as before on the QQQ, I entered here, and I'm still in right now. And I'm also got into the SPY as well too. Back here, I think it was back in June or July. Yeah. So anyway, so that's I have those positions going as well too. But my foundation is always based on what? My system, the way that I trade. And it's really important, right? So I have that, but I really want to touch on something when it comes to the way that I've positioned myself, and something that's really important for you guys, that you look at this here, right? So let me actually do this here for a minute. If I go to, so let me just bring this up here. So I'm going to bring this up here for a minute. I want to share something with you. So initially, I was originally talking about, and this is the videos that I've done here, right? So this is the videos that I've done. And you can see how that I was initially talking about how that we're probably likely to get some sort of a slingshot pattern and so on and so forth. But then I started to do videos by saying, like, for example, this is probably going to get ugly here. I started talking about like this one back here. I did this back a week ago. As you can see here, alert, pullback coming, gold, silver, and so on and so forth. I even did a video on, was it this day right here, which is 2 days ago. I did a video right here, and I said that this breakout, and I didn't, and on the video here, I said, I don't know where it's going to break out. I want to see it break to the upside, but when it breaks, it's going to be a big breakout. And that's exactly what we got. And then we obviously got these videos here. So I really want to talk about that for a minute, because some of you guys really don't understand the nature of the beast of your trading opportunities. Whenever I get into a trade, some of you guys, you go, all right, I'm getting into mining sector. Like for example, I got into the SIL. I got into the SIL right here, right on that day right there, right on the close. Because it looked like I was about to start to make some big moves, right? So I got on that day right there. But I also have a plan that I have a plan of riding this long term, but I'm also have a plan that if it doesn't work out for me, I'm going to get really, really, really quickly, right? This is your ability. This is what, and so right now I got out really quickly and I had like a real small loss in my account, and I'm waiting for a re-entry now based on the mining sector. But some of you guys are holding on, hoping and praying as it does something like that, and now you're wishing you'd be a bit more disciplined to get out for a position there. So it's a really, really important, guys, to it's really important to see that. Again, like I've always seen things like gold and silver. I've always wanted to see it break to the upside, but I've also said in many of my videos, and some of you guys that still watch my videos, or some of you guys that watch my videos, all you hear is that it's going to the moon. You don't hear me say, which I do, but you know what? That still happen as well too, guys. So just be prepared for that. But you just don't see that, and that's something that's something that because maybe you don't want to hear that. All you want to hear is that it's going to the moon, but you don't want to hear about it's going to go down. But that's always the opportunity. And I said on this day here when I got into it, this is probably going to have a big breakout. Here we go, Donkey Kong, so on and so forth. But there's also could be a chance that this actually doesn't work out, and I need to get out fast. That's exactly what I did. And now some of you guys are still holding the beans based on a pattern that I got into, saying, "Oh, John did," it's like I got into this day here, and then like this day here I got out, and I said to you guys, I'm out. That's no longer working anymore. We're probably going to continue this downward trend. And then some of you guys, like a day or two later, like after I did that, you're like, "John, but didn't you say buy the mining stocks?" I'm like, one, I didn't tell you what to do. Secondly, I had a plan, right? You must have a plan if you want to be part of these markets. So there we go, guys. I hope you enjoyed today's session and today's update. It's really important, guys, that some of the things I've talked about in this video, you can see how that your mentality in the markets. I want to see you succeed in the markets. And unfortunately, 12 months from now, 1 year from now, the people that I'm talking to right now, most of them are going to not be here, and 12 months later there's going to be a new fresh crowd, right? That's just the way it is. I don't want you to be most of that crowd, because most of the crowd is looking for the quick tip, to get rich quick, and blah 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 blah, all that sort of stuff, right? I don't want that for you, right? What I do want for you is to have a solid foundation and for you to actually do really well for the rest of your life. Trading, you got to treat it seriously. You got to give it respect. And respect means I'm getting into this position. This is where I see it going. But if this happens, I'm also out for a loss, just like I did with the mining sector. And that's what's important for you guys as well. I want you guys to be part of this, right? You guys, if you go back to my YouTube video, I've been doing this now since when was my very first If I go back to my YouTube channel here and I bring up my very first video, the very first day that I did this one, date oldest. When was this one here? Right? Back here. Look at this one here. This was actually chart analysis on CBA 13 years ago. Right? 13 years ago. And I started doing all these videos here 13 years ago. And so on and so forth. So I've been around the markets this long because of the stuff that I'm talking about here right now, and I want that for you as well. I want you guys to do really well as well when it comes to these markets, and I want you guys to build a solid foundation. So anyway, guys, if you do need help with your trading, you need some sort of a formula, some sort of a plan to actually attack these markets with, then just click that link in the description below. Go get access to that Super Trader formula, and I will speak to you real soon.